Hi everyone. Today we did get that up move like we expected, pushing towards that trend line, and then we did end up finishing right at it, just below it, and then rejecting from there, expecting a little bit of a pullback off of this area, but we did close above 597.63. So let's take a quick look at the other charts as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So in news today, we got Trump coming out once again and pushing on Fed Powell to do more cuts. He said he wants a full point of cuts. Despite the strong jobs report, we were a little concerned that the jobs report was going to be a little weaker than expectations today, especially based on the ADP data that we got early in the week, which was much weaker than expectations. But it turned out to be fine today, and markets were fine. But you still got Trump coming out and saying he wants more cuts and he wants them faster. But Jerome Powell says he is going to continue to be patient and wait for the data and wait for the tariffs to come in. So ultimately, this is probably not going to do a whole lot of anything, but you got more rhetoric from Trump. Moving over to fear and greed, we got a push up to a 63 from a 58. Nice little spike higher here. This was in line with what we expected. And finally, we got momentum stepping into regular fear out of extreme fear. Finally, it happened. Strength still in greed, put breadth, also extreme greed. Put call ratio continues to kind of hover in regular fear. Volatility still flat after the little bit of a spike up we saw yesterday. Safe haven demand, no changes there. And junk bonds back into regular greed after pulling back pretty significantly over the last 2 days. Moving over to the economic calendar, you can see GDP for the Eurozone, a little better than expectations. That was good. Participation rate, slightly lower than the previous number. Non-farm payrolls, much better than expectations. Hourly earnings going up a little bit. Private non-farms, also quite good. Unemployment rate, flat. So none of that stuff that we were concerned about earlier in the week came to fruition. Markets were totally fine on these numbers, and ultimately this seems to be pretty strong here for jobs despite that weaker number we saw earlier in the week. And then moving over to the charts here, starting off with the S&Ps, you can see we went right to that trend line. That was the hope yesterday that we were going to bounce off this kind of lower trend structure, push towards that upper trend, and sure enough we did. Pretty clean here on the hourly chart as well. You can see big gap up pre-market, rallied to that level, rejected there a little bit after overthrowing and then pulling back into this kind of zone, down just a smidgen after hours. My expectation is that this is going to pull back down into the 595 area, but overall pretty good. Nice little rally, nice little rejection from there, waiting to see if this structure ultimately breaks. This is a rising wedge style pattern, which ultimately should break to the downside. Moving over to the Tasty charts, that rally today was enough to put us back into bullish conditions. Took out the trailing stop there, 599.62, closed above it on that 8 o'clock candle, and then we pulled back from there and then finished below the level. So is this one of those cases where we do technically break it, get into bullish conditions, but pull back, which arguably is not necessarily a break, so something to watch for there. And then looking at the 4-hour chart, this has been in bullish conditions the entire time, just continues to rally here. Pulled back to the 34 EMA, rallied up to that second ATR band. Again, still rising wedge style pattern, but technically bullish in the short term. Basically no volume on the day, which is interesting. Trailing stop still sitting at 589.75. Moving over to the NASDAQ gapped up and dojied at that level. Ended up about 1%, but right at the level here, right at the resistance, and again at the trend line. Came up to it, multiple touches, rejected from there multiple times. Momentum fading, RSI fading, neutral on the momentum there for the daily chart. RSI, lower RSI read at the same price as the previous peak here. So interesting to see this continuing to fade. Is it going to do it here? Hard to say. In the after hours, we are basically flat, up about 4 cents from the close. You can see it here on the hourly chart. Push to that level, rejection, push to it again, rejection, and we are right here. Honestly, I think this is probably going to fade off a little bit more. And based on this structure, we should expect to push back down to this kind of 524 area. Look for that trend touch and then look for the rally off of it. If this structure breaks, that's obviously going to be very bearish from that zone. And then moving over to the Tasty charts here for the NASDAQ, kind of same thesis as the S&Ps. Came back to the trailing stop, 522.47, rallied up off of that level, got a slight continuation, but not a higher high from the previous day's high. And then looking at that hourly chart, this stayed in bearish conditions, and this is a little bit concerning for sure. So you got the S&Ps going into a little bit more bullish conditions, a little bit of a stronger push. But here on the Qs, we came up to that trailing stop, 531.66, multiple touches of that level, and then closed in bearish conditions with a rejection off of that level. So based on this, you would expect a high, lower high here, look for a low, potentially lower low in here around 517, 518 potentially, which could take you back to these lows from the 30th and the 2nd here of the month. Moving over to the Russell and the Dow, these had a really powerful push here. You can see the Russell up 1.62% right to that next level to 11. After hours up a little bit more, really powerful push on that good jobs data. At this point, 214 is your next level. Same here for the Dow, getting above this kind of consolidation level, 426.20, but we did kind of stall out at the 19 May high. Does this push to 432.78? I think that remains to be seen. The momentum is basically neutral. RSI a little bit bullish there, so pretty strong continuation. We'll see if we get a little bit more on it on the Monday. Moving over to the Mag 7 here, you can see the Mag 7 did touch that level again. This is 4 touches in a row and then rejected from that level. 315.04 after hours, continuing to drift lower here. Momentum bearish, RSI bearish. I just do not believe we're going to get above this level, which seems to be a major zone of resistance, which again, if this sells off, that's going to be a major headwind for markets. These companies pretty much lead markets in whichever direction they are going, and they have stalled, at least for now, over the last 2 weeks. And then looking at Apple and Microsoft, you can see Apple just continues to reject off of this trend line. Zone of EMAs, cannot get above it. Momentum slightly bullish, RSI slightly bullish, but seems to be fading in this zone. Once again, 55 EMA resistance at 205.13. Microsoft, on the other hand, does not care at all, just continues to go straight up every single day, up another 0.5%, 470 now for Microsoft. Moving over to Amazon and Google, haven't talked about these for a while, but you can see Amazon actually had a pretty good day, up about 2.72%, back above this 212.25 level. Can it continue through here up to that next zone of resistance? 233. I'm sure there's some kind of resistance in here that I just need to add, but we haven't been above this level for a long time. Nice little push there. You still have the high back from 13 May. That is going to be 214.84. Do we get to there? Do we get through there? I'll be watching this one. Amazon, nice little break. Want to see this continue up through that zone, and then you can see Alphabet has been stuck in this pattern for a long time. We got into this pattern mid-April or so, and you can see just chopping in here. We said this was a bear flag, but this has lasted seemingly forever here. We also held a higher low a couple of times, not coming back down to that trend structure. So this looks a little bit better now. Can we push through here? Your current support, 170.95, and then that next level, 179.42. If it can get through here, maybe we push back to 185, but honestly, I would be very hesitant here on Google. Moving over to staples and discretionaries, you can see these had an okay day, a little bit of a bounce, more of a dead cat bounce off of that low. Inside candle, that can lead to a little bit of continuation, drifting a little bit lower after hours there on staples. Discretionary is going a little bit higher. Both of them have bearish momentum and bearish RSIs, so still looks like a topping pattern, probably just a slight reprieve here. Still looking for them to go lower. Moving over to Breadth. Breadth actually had an okay day as well, up 27% here on 20-day, going all the way from this kind of 46, 47 area all the way to the 60s. Still 60 is not super strong on 20-day. I still expect it to reject from here, not getting above 68.14. Maybe we have 1 or 2 more days of bullish, hit this zone, and then reject from there. RSI's right at the SMA. Same here on 50, right there at the SMA. Still in the same consolidation range. It did get back above the level there, 68.66, which is interesting. But either way, I would say this is still neutral on Breadth. Moving over to bonds, J&K was basically unchanged once again in the same zone. Very little movement here for J&K over the last month or so. But looking at TLT, big move down on that strong jobs data. That means potential for less cuts in the future, down 1.27%, with momentum selling back off, getting back below this 85.90 level. Don't love it, but ultimately those cuts will come. 1 to 2 this year is still the projection. So hopefully we get one soon, and then at least one more before the end of the year. Moving over to the VIX. The VIX did sell off once again. We're still looking for a touch of this trend down at the 1616 area. So that would mean one more day, touch that level, and then look for a little consolidation potentially, or just a spike up off of that zone. Momentum and RSI basically neutral to potentially bearish, but again, still looking for a touch there, looking for that bigger push. Moving over to my accounts, you can see I did take off the shares. I did make money all day, held these to expiration. Totally fine on that. Didn't put anything on for the next day for the Russell, waiting to see what happens on the Monday. I'll probably look for a position early on the Monday, but we're right at that zone of resistance. I was a little concerned we might sell off from there. And then looking at the Qs, I took off the shares, took the profits on the shares. That was about $1,200 profit on that trade, so that was good. Of course, some of that was eaten up by these calls here, which are obviously bearish right now, and a little bit in a loss. But either way, I'm expecting markets to sell off. We still have bearish conditions on that hourly chart, and I do think that that is going to have some follow through over the next day to 2 days. And either way, at this current position, I got plenty of room here. 42 days to expiration, and the break even to the upside is that 535 area. Let me know down in the comment section what you thought of the moves today. Were you expecting a bounce here like we were, or were you looking for further sells? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.